Hello. Welcome back to the Trading Triangle. Once again, it's me and Kaye on this fine Sunday at the beginning of April. How you doing, Kaye?
I'm doing amazing. Happy Sunday. And man, what a week. We'll get into that a little bit, but what a week. I mean, I cannot keep smiling. It's like I'm smiling with from ear to ear, right? It's
I'm not
great.
too sure. I'm not too sure many other people will be smiling as much as you, for sure.
But I
It's
will
we'll
I
get
will
into that a bit
explain why.
later on.
Yeah, I will explain why, but
We'll
let's
get,
keep this going.
I'm sure we'll get into that a bit later on. But obviously, first we must disclose that it's a disclaimer. We're just a couple of guys looking at charts on the internet, talking about markets, giving our opinions, our perspectives, etc. And yes, that's not financial advice, quite simply. Of course, a massive thank you to Wolf as well for letting us use the platform. We couldn't do it without you. We really appreciate the support. And of course, if you put your ticker requests in the comments down below, we'll get to them after, obviously, the market overview, our individual picks for the week, and of course, we'll get to them just after that. So keep sticking them in the comments. I think we've had a few already, which is nice to see. And yeah, we'll jump into this slideshow, shall we?
Let's do it.
All right, here we go. April the 7th already. Wow, incredible. So, I mean, the market overview is pretty much just one color. I don't even know where to start, but it was a very red week, and it was a very aggressively red week. We can see here straight off the bat, Apple, Nvidia, Amazon already almost down 15%, including Tesla actually, all down almost 15%. And obviously in the top left-hand corner of the slide there, we've got Microsoft, Google, Meta also posting pretty aggressive numbers. Do you want to talk to this slide a little bit, Kaye?
I think there's not much to talk, assuming most folks are watching this and they know exactly what has happened. You got Liberation Day, and a lot of dollars were liberated from your account last week. And unless we hear otherwise, more dollars are going to get liberated next week from our account. So that's that. But all jokes aside, it is pretty serious in terms of the SPY, or S&P 500's ETF, was down almost $100 from the all-time high, right? We were what, 612 or something, and then now we are trading at 505. So it's a pretty serious matter. I'm laughing. I'm not laughing, but it's so hilarious that we are in this situation. But for a lot of folks, this is pretty serious, right? This is a serious matter. It's your hard-earned money, but hey, it's pretty shitty, I would say.
Shitty. You heard it here first from Kaye. It's a shitty situation. Of course it is. You can see the amount of red on the screen here. And we'll talk about maybe if we might continue a little bit heading forward. We've got a comment here from Money Manage. We've got Kaye, you were spot on. You're so bearish on Apple. And yes, it's paying off quite nicely now. I was joking about it at first, but I didn't disagree with you. So yeah, we'll get to that in a little bit, I reckon, as well. Do we have Apple chart today? You do, don't you?
Actually, that's the stock I'm covering, and it is actually, if you follow the news, you'll know why I'm bearish. But there's another wrinkle to it, and we'll touch upon that wrinkle.
Awesome. We'll get into that just a second then. So fear and greed, we are at an all-time, well, I don't know if it's an all-time low, but it's an all-time low of the recent year at least, 4. I mean, what a number that is. I didn't realize it could go even this low.
There was so the account bar chart, they posted, I guess, probably a modified image of fear and greed index. You can go check it out on my profile on Twitter. It actually fell below 0. It's like dead. But I don't remember the last time I have seen. Now, I don't remember what happened in March 2020. I was not probably following fear and greed at that time, but it should have been similar range, I'm assuming. In March, when it fell, the stock was down like almost like 10% plus.
Yeah, I mean, my video has gone, but I can still hear you. Can you still hear me? Is that all right?
Yeah, we can hear you. Yeah, that's fine.
Okay. Yeah, I'll switch up the cameras in just a second, but we'll talk to the left side of the screen now. So you put to call 0.95. That's getting quite large, isn't it?
That is so. If you remember last couple of weeks, if you have been following the channel here or joining live, we were in the 0.78, 0.8, but it shot up from 0.8 to 0.95. Now, these put to call ratios are for the entire market. So it's not like for a stock where it goes up or down that fast. There's a lot of volume. So a lot more puts are being opened against calls. That's massive, right? This is very, very bearish. And then look at the VIX. We were in the 20s, 24, I guess, and then we are 45. So that shows you 7.92% down on SPY. That's like we were down 1%, 2%. We would be like, oh my God, the SPY is down. It's like almost like 8% down on SPY, 8% on QQQ. I don't know. Are you in a bear territory on QQQ? Let me see.
Oh, 100%, yeah.
right?
I think with these numbers as well, sometimes you get this in 1 year, and we've just had that in 1 week.
Yeah,
So you
exactly.
can see it's a very news-driven market. It's been mentioned in the last few weeks, actually, and it's not going to be stopping anytime soon, that's for sure.
No. Key events for next week, I think the tariff situation is going to be the main headline going in. So if anybody says, hey, we have this event, that event, all that does not matter. What matters is what comes out of White House on terms of tariff, and it's going to drive that reaction. If there is some pullback on how we are tariffing, it's going to be, we will probably see a quick bounce, a solid green day. If we see more retaliation, by the way, so China already imposed 34% tariff. European Union responded with a $28 billion tariff. $28 billion they will tariff on $28 billion US goods. So that you might see in the pre-market or the futures market tonight. So,
A few
but
pushbacks.
but here's also the thing, right? A lot of people are predicting a Black Monday that's going to be super red. And whenever
Yeah.
Jim Cramer goes on a crazy tweet or whatever he does, something opposite happens. So I don't want to be that bearish, but the problem is you have tariffed every single country in the world.
Some
Del-
countries I didn't even know existed. When you see
exactly.
that list and you think there's only penguins living on certain islands and they've somehow tariffed it, I thought that was quite funny. Don't know if that was true or not, but it was quite funny to have a look at. But moving on down the bottom there, we've got key events all week, obviously tariff drama, as you mentioned, and FOMC
Yeah.
minutes as
Yes.
well,
Yeah.
which will not help. And that's on the Wednesday as well, probably be around about a couple of hours before close, I reckon, something like that. It's normally
Yeah.
around.
They generally release around 2 p.m. something like that. 2 p.m., 3 p.m. something like that.
Yeah. But as for the Black Monday, of course, we're not going to speculate according to that. We'll see what happens in probably about 5 hours when the futures open. I think I'll be staying up here in the UK just to see what happens at that 11 o'clock PM, obviously here in the UK. But yeah, it will be fun. That'll be definitely. Right, upcoming earnings. We're coming back to earnings season. Obviously, with Friday, we've got JP Morgan, BlackRock, and Wells Fargo, Morgan Stanley. So the banks are back, okay? The banks
Yep.
are back.
Banks are back. Banks are
Anything
back,
else?
and Delta is back. So if you are into transportation kind of trades, I think you should definitely look into Delta because that could provide you an opportunity because they with all the tariffs and a lot of travel advisory coming into United States, flights will get impacted, right? And that could lead to the stock actually compressing, and you could have an opportunity to actually get into those stocks if that is your portfolio, right? So those are a couple things you should keep an eye on.
Yeah, I think this is the time, but we kind of mentioned it before we went live, is that this is the time to start looking at your favorite positions, the kind of fundamentally good stocks, and just kind of reevaluate kind of where they're at in stands to kind of price action towards the fundamentals, and kind of is it really actually a good value point for some of these stocks. But I'm sure we'll get into that a bit later on when people start suggesting some stocks. So keep them coming in the comments. I'll stick the thing up on the screen. Stick your tickers in the comments. We'll get to them probably about 20 minutes or so now. Maybe about 10, 15 minutes, actually. It doesn't take us long to get through our charts. But yeah, stick them in the comments. We'd love to hear what you're looking at, what you're kind of apprehensive about, perhaps. But it's a tricky market. I understand that. Obviously, maybe not everyone wants to put their ticker request in because at the moment, it just feels like everything's going down 10, 50%. So we'll see what happens. All right, let's move on to the first chart of the day. This is SPY. This is actually a 2-week chart. I don't know why. I think it just looked better on the screen just to get more kind of price action on the screen we got here. Obviously, a really aggressive last 8 weeks. It's been 2 months now, isn't it? Wow, that's quite incredible. So actually, no, 7 weeks because we've still got 5 days left of this candle technically, and it would just seem to be heading down. So I've very speculatively kind of drawn this box just because it was a recent kind of resistance point around this kind of 480 line, which is the yellow line drawn on the screen there. Obviously, we do have a couple of points here with the kind of about 500, I reckon. And we've kind of blown past this week as well already. So perhaps we are going a bit lower than that one. But the reason I drew this box here is one, obviously, because of the resistance here. And obviously on the right side, the volume starts picking up at this level. But it really starts picking up around this 440, 460 level. Now, that's, again, another 10% off. So it's got to be pretty tricky. Whoops, what did I just do there? Anyway, I'm back there. It's going to be another 10% down, which is obviously not out of the equation. So what are your thoughts on the SPY at the moment, okay, chart-wise?
So, I mean, I switched to the daily and the weekly chart, and I know you have a 2-week chart here, so it's a little bit different. So 500 is going to be a pretty psychological level for the stock. It's S&P is already down 17% from its all-time highs, right? So 3% away basically from getting into the bear market.
Yeah.
There's no point in speculating where it will go because at this time nobody knows.
Exactly.
If White House comes out and says, "Oh well, we effed up and we are going to go and we will remove all the tariffs," right? Boom, the market was gonna go up in a V-shaped recovery. If they stick with it, we may see further depression or further decline in the stock because it's going to impact all the companies regardless of which area they are in, because now you have tariffed everybody out there, and you are going to start seeing retaliatory tariffs next week, right? China already imposed, and I think they go into effect on 10th, which will be sometime next week, Thursday, I think. And then European Union is going to do the same. Canada has done the same, or they haven't announced yet. We are still waiting on Mexico. We are still waiting on some other countries. But bottom line is, there's no two way about it. It's like it's a wait and see position. Um, on the flip side, if you hold SPY in your long term position, and I really hope you do, you should take advantage on adding these.
Yeah, anytime you get a market correction, generally is a good time to add in the kind of rule book of investing. This is actually worse than a correction now. This is kind of going into bear territory, as you mentioned. So yeah, it's definitely worth looking at the kind of big indices, even sometimes the kind of big dividend paying ETFs as well. There's no harm having a look at that kind of stuff as well, adding to your positions there. Because the blue chips are blue chips. They're going to be around for a while. Obviously, you might get the 1 or 2 kind of come down in the next 5 to 10 years, but generally blue chips kind of stick around, don't they, Kaye?
Yeah, I think SPY, in terms of everybody should have a SPY, not necessarily just SPY. There are other ETFs as well which mimic S&P 500, but this is like a gift to you, right? When would you get the last time you had a 20% correction in S&P 500 and you add it to your position, right? This is now, I'm not saying it cannot go down further, but when you dollar cost average, you do weighted dollar cost average. If you have pulled back 17% from all time high, which means you can start to add more into your SPY account. This is why adding into quality companies is very, very important. It's below its 200-day moving average, is below its 300-day moving average, so it's a no brainer to keep adding it.
And I want to kind of touch on something you said there, which is obviously it can always go lower. And of course, it can always go lower. And that's why we should always be careful with the kind of money that we're kind of earning. And we're kind of, hardly kind of basically earning the money. We don't want to lose it. Can't put anything that we can't afford in there, of course. And so just be wise in that section. Obviously, don't put all of your wealth in there because obviously it can keep going low. Of course, we have seen market crashes before. And if market crashes were a lot worse than this, that's for sure.
Yeah.
So, just be careful out there. But obviously, do keep your kind of logical mind on there as well, if you have one, of course. But we'll move on to the Qs. If we're done with the SPY,
I think we're done. It's going to be the same story.
The same thing, yeah. So
same story with QQQ.
So talking to the chart here, and I've got 404 on that kind of same level as you kind of spotted with the SPY, that kind of box I've drawn there. It's a bit closer for the QQQ, but obviously we know that tech drives the market, so perhaps keep looking at QQQ might be a bit more of a kind of priority for me personally, just because I think it does run the market. It's run the market for the last few years. So we'll see if that can hold up at any stage really. But I'm not looking to buy any of these points. I'm just drawing these on the charts just as an interesting point. I'm not going to go and try and find the bottom because that's not how we trade. It's not how we kind of do things around here, because trying to buy the bottom is just it's impossible. So having that bottom set and it kind of makes them move up higher, perhaps maybe makes another kind of higher low, perhaps the kind of news falls in quite nicely, then that's we'll see what happens there. I'll let you start talking to this one, okay?
Yeah, no, absolutely. I think we have a couple comments from AG on. So SPY is down 17%, QQQ is down 21%, 21.53. So it's officially in the bear category. Now, of course, it can go down more, and the problem is we don't know how much it can go down. So let's say if I have $1,000 to invest, right? I will not put my entire 1,000 in one go. You generally use tranches. So you probably would, let's say, put 250 in buying SPY or QQQ. Then you buy another 250. Then you buy another 250 as it goes down. So that's how generally investing works, you don't deploy all your cash in one go. You deploy on based on how many times you want to invest in. So if you are more concerned that, hey, it could go down 10% more, then keep your dry powder with you and invest more as you go down. So use weighted dollar cost average to invest. That's like
Bread
it's
and
an
butter.
age old, yeah, that's an age old investment philosophy or advice from all the greats, right? It's nothing new. It's not coming from me. I'm not like telling you this. This is from Warren Buffett and all the top investors in the world who have seen these kind of events many times.
Yeah, I think as the saying we have in the UK is it's the bread and butter of investing. It's the you lay it out first. It's the fundamentals. You DCA into your favorite stocks, your favorite assets. We've got it here. Obviously, AG is also saying let it settle a bit. Did I bring that up? There we go. And then start your SIP. So yeah, and then when it settles a little bit. So yeah, nice comments keep them coming in. Of course, if you want to get your ticket requests in, of course, put them in the comments. We've only had a few this week. Which might make the stream a little bit shorter, but I'm sure we can touch on the Mag 7 at least if we don't get many more. So yeah, with that, should we move on to the next chart, okay?
Yeah, let's do it. What are you covering today? Amazon, right?
Amazon. And it's only because it looks technically quite nice. This is the 2-week chart again. I've been looking at the 2-week chart a lot recently, and I'm not too sure why. I think it's just because it's meeting certain areas and it just looks better on the screen when I look at it, because the weekly, if you zoom out, sometimes the candles can be a bit small and a bit harder to read. So I'm going with the 2-week chart, and you can see quite clearly here, obviously lots of volume around this area of 155 to 170. We've come down here, retested it 3 times in the last year, basically. Once in kind of May last year and obviously July as well. And then looking back all the way to kind of the turn of 2020 into 2021. And also the beginning of 2022, you've got all of this price action that kind of went sideways for Amazon, really building that kind of volume shelf, which you can see there on the right side. So perhaps this might be a point of interest, maybe not now, but maybe a little bit lower, of course, if we do get that continued drawdown in the market. So I've been looking for kind of at least 155, 160 for Amazon in the coming days to see, if we can add to our long-term positions at least. Trading-wise, it's a very tricky environment to trade. So I would maybe sit on my hands in that respect, but maybe adding towards my kind of investing portfolio for the for the long term, of course. I mean, Amazon's not going to go away anytime soon. So yeah, no, it's a very interesting kind of take, I think, to this chart. What are your thoughts here, okay?
My thoughts are that we are down 30% on Amazon. The level that I personally would first look at is the 155 that you are also looking at, right? That was your previous resistance, so you could find some support there if we continue to see further decline. And then it would really interest me to start coming around 148, 149 is where I would really like to start adding to my long-term position. Right now, I mean, I think my cost basis is much lower on Amazon since I've been investing in for like 2012. So it's not like I'm in a rush to add more to Amazon, but I think those are a couple levels that I would start to, slowly add further into my position. But nothing major on this one. I have actually other trade ideas that I'm actually adding more on than Amazon, which I think there's a lot more upside potential than Amazon.
Awesome. Yeah, no, that's all I've got to cover on Amazon. If we're done with Amazon, we can move on then.
Yeah.
And we can find me obviously on X at SeanTrades_, and obviously on YouTube as well, doing a few more videos every couple of weeks there now. And I've got a trading community as well, which you can join. We talk about trades and we go through live trading as well. So you can go ahead and jump over there. The link for that is in my X profile. So you can go ahead and have a look at that. But yeah, we'll hand over to Kaye's pick of the week. What have you got, okay?
Yeah, so my pick of the week is Apple. And I think Apple is in a very precarious situation here. So my previous thesis, when I don't remember, did I bring it last week or the week before? I brought Apple, and one of the bearish thesis was, hey, Apple Intelligence is not working and they haven't released anything. So I just did not understand, why do I need to pay that much premium to a stock where the growth is not there, right? They haven't really produced anything. Producing a new iPhone is a run of the mill stuff. Every year you're going to produce a new phone. It's not game changing, right? So that was my thesis initially. The second wrinkle that has popped up, and I don't know if everybody's aware, with the tariffs going everywhere, China, Vietnam, India, Apple is impacted like anything, because China has a 34% tariff, India has a 26% tariff. So the problem is, where are you going to produce phones? Where are you going to manufacture the phones?
Yeah.
If you say, well, the factories will be created in US, great. It's going to take 1 to 2 years for the factory to be set up, come online. So 2 years means 8 quarters. So for the next 8 quarters, why would I want to pay 30 times the earnings or 25 times earnings? I need to pay maybe 15 times the earnings. So the stock has more potential to come down. And if you know, gap fills are happening. That was the gap we talked about, what, 2 week, maybe a month ago, 2 months ago, when we were thinking, how can we even fill that gap of 176 or 180? How close you are to that gap now? You
Yeah.
are only 10% away to fill that gap.
It only takes a few days.
Only takes a few days. So I think there's a lot more room for Apple to fall. And Apple is not going to fall because of all the geopolitical. That's a reason. But there is a fundamental problem right now with Apple as a company. If you are not producing products that you are able to sell, and whatever you promise you did not deliver, that's a problem right there. So I don't know what the enthusiasm is. I know Apple investors or Apple cult members, I don't want to use the word cult, fanatics, they always push for it. But end of the day, Apple is not competitive here. I don't want to pay 30 times earnings for a stock which is not showing any growth potential, and gaps will be filled.
Yeah, no, it's a very compelling point you make. So are you looking at any point to add for your long-term position
No,
at all, or
I
not?
actually,
You're just sitting on the position and seeing what happens.
so the way I'm doing it, I actually don't buy any more apples. I actually have a lot of Apple positions, and I've been buying since 2009.
Yeah.
So I have, and it went through multiple splits. So I have like in 4 digits of stocks of Apple. So what I generally do is I sell covered calls on my positions, on part of my position. So I'm basically waiting for Apple to fall further so I can close those position and reopen them again for further, for leaps out. So basically that's how I profit on Apple trades. I don't need to add more on Apple. It's I'm over allocated on Apple in my portfolio.
Yeah, I mean, the only thing I'd add to that is this: if we do continue this market downturn, just on a technical level, this 168 level is one of those it needs to hold if it's gonna, you know, do anything in the coming quarters. You said that 8 quarters. I mean, perhaps we come down below this 168 level in the next 8 quarters, and that would look quite dramatic, I think, especially on the kind of RSI. This is why I've moved our faces over to the right side. We're already really low on the RSI. We might get a short-term bounce, and then of course maybe whatever happens after that, that's a different
So
story. But
so let's say, so there are two problems here with Apple, right? One problem is related to the fundamental problem of Apple, that they are not able to release anything Apple Intelligence, right? That's the fundamental problem for the company. Second problem is a tariff problem. So unless White House comes and says, hey, we are going to remove all tariffs, that
yeah,
only solves one part of the problem. You will probably see a run up to Apple if that happens, but the fundamental problem is still not solved. So there are two problems here for Apple that you need to understand, and if you disregard those, you might only see a bounce, and then at some point in time the fundamentals are going to catch up to Apple. Apple is too big of a company, and fundamentals do matter at this point in time.
need to find something in the back of their locker, that's for sure.
Yeah, I mean, think about this. The Apple, they were producing a car, right? That program got shut down. Then they
Yeah.
then they moved towards, we will have the software going to Apple. That Apple is going to outsource to all the products. So to the car companies, they shelved that program. The Vision Pro did not work. Then the Apple Intelligence, it's not working.
What will work?
I'm
That's the
bullish long
question.
term. I'm bullish long term, but
Yeah, with a company like this, you have to be because of the amount of cash that they have. But
exactly. But short to midterm, you have a problem. And if
yeah,
you were not an Apple investor and you want to get into Apple, you want Apple to, you should be buying Apple in the weakness, right? This is the fundamental weakness Apple is showing, and there presents an opportunity for you to add Apple.
and you can see it reflected in the chart. All this kind of talk around tariffs, etc.
Yep.
All right.
I think we covered Apple a lot, but yeah, my bearish thesis is still there. You could definitely trade more on call credit spreads and stuff like that for now, but I would wait and watch at this point in time. I'll wait for the gap fill to happen. And there are a couple requests that folks have put in, I think we have a lot of gap fills on those.
Awesome. Look forward to getting that. There's been lots of gappy markets at the moment. So yeah, we'll get into that in a second. But where can we find you then, Kaye?
You can find me on Twitter. I post pretty much every day, multiple times. YouTube. I will actually put together my thesis for Apple, which I was supposed to do 2 weeks ago, and I did not do it. So I'll do it probably this week. And then I also have a written format of my analysis on Substack.
Give the people what they want, okay? Give them the Apple thesis.
I'll do.
Awesome. Right, should we move on to the charting section of the stream?
Let's do it.
Well, what a week.
What a week. And I think next week is going to be very exciting as well. We could see a green week. You never know.
Is it CPI this week as well or not?
I don't know. Let me see. I don't remember.
We probably should have put that in the slideshow. But if it is CPI as well, then that's just another nail in the coffin.
Yeah. Let me see. CPI, PPI.
Got a couple more requests coming as well. We've got SMCI and Tesla.
Yes, I have some great thoughts on SMCI, which I will also share. Let me see if it's CPI. We have Redbook. We have Fed.
I can have a look if you like. I've got a financial juice. I'll have a quick look. So we have US CPI on Thursday.
Okay. CPI. Yeah, I mean, I think at this point in time, the tariff is probably the hottest news.
It is, but the CPI won't help.
Yeah, CPI won't help.
I mean, we thought we had a good week last week. Imagine what this week could do. Right, this is the SPY chart, of course. But what's the first chart we've got tonight then, okay?
The first one is ALAB. It's called Astra Labs, and I'm not sure what it does, but they sell semiconductor-based connectivity solutions for cloud and AI infrastructure. So it's a semiconductor ticker.
So I think we brought this up a few weeks ago because what I've done is I've drawn a line here, which I so often do, of a RSI divergence, which seems to be kind of still happening. Again, it's hard to do technical analysis when the market is the way it is. But if you like these names and you think they look good and you think they're kind of shaping up, there's no harm in adding to your positions, at least on the smaller scale. Obviously, that's not financial advice, but it's something you do what you need to do. But yeah, I mean, it's continuing in the upwards fashion on the RSI, and it's continuing on the downside. So the RSI divergence is definitely there for ALAB. What it's doing fundamentally, I'm not too sure. I don't really know much about them, but there's a great technical indicator there. I'm going to write it down. I'll have a little dig into that in my private time. But yeah, any thoughts on ALAB, okay?
No, I don't have any thoughts yet on ALAB. From a rating standpoint, it does have a buy rating from Wall Street. There are 14 buys and 1 hold, so 0 sell so far. And they did get a upgrade as well recently. But I don't know if that upgrade might change based on how things are progressing with all the tariff announcement, right? And especially with what is our Commerce Secretary Lutnick, he specifically called out Taiwan on semiconductors, on why they had nothing. Why are we producing semiconductors in Taiwan? Unfortunately, like other manufacturing units, semiconductor units will take years and years and years. Like generally the whole factory is set up and you start to produce chips, it takes anywhere between 5 to 8 years. So this administration will be long gone by that time happen. And thankfully the CHIPS Act was there, but unless they gut the CHIPS Act, you would not be seeing those factories popping up. And guess what? They gave money to Intel to do the job, and Intel has been squandering away all that cash they got from the CHIPS Act, thanks to their CEO, the old CEO of Intel. So that's that.
Should people still be looking at semiconductors at all at the moment?
I mean, for me personally, this is a long-term play, right? I mean, you're looking for not just what's going to happen in March and April or even this year, right? Semiconductor is a long-term play. Like, can you produce equipments? Can you produce anything without semiconductor chips? The answer is no. How is going to produce, who's going to produce, where it's going to be produced, that's just going to be a constant evolution as we go through it. But the chances of any other company coming out and replacing NVIDIA looks highly unlikely at this point in time. because you need those massive equipments. And the biggest company on planet Earth for creating a semiconductor chip equipment is ASML. No other company has come close to it. So bottom line is that I think it's here to stay. These are noise for the short term. Short term, could be a month, could be a couple months, but I think a long term hold in semiconductor is a good opportunity. And if you don't want to go, names, you don't want to
Yeah,
pick stocks, then go on the
ETFs,
ETF side. Yeah, exactly, like SMH or something like that.
SOXX or SOXL, one of those. There's another one there, and there's a few kind of
Yeah, there are
niche
a
ones as
few
well.
semiconductor ones, and pick the best ones that which has lower the
Fees,
cost, the
yeah.
fees, and has a good returns. I think that would be the best.
Exactly. SMH is always a winner because people like that one a lot because
Yeah,
obviously you've got
yeah,
Nvidia and ASML right up there. Broadcom, I think, is up there as well, and that
yeah,
kind of that top 10 holding. So yeah, it's another one to kind of look at. But obviously, Nvidia is about 20% of that, I think, or 25% of that,
something like
which
that. Yeah,
which is crazy.
yeah.
Anyway, should we move on to the next one then?
Yes,
Okay.
next is APP.
App loving. A lot of people like this one back in the day when it had that massive move up. You can see on the chart here. It kind of dribbled up, not too much. I imagine there's probably not as much volume there, and then bang, off it went. Let's get rid of the RSI there for now.
So this is in progress to fill that gap. If you look at it, right, it created a
Is it?
gap
Yeah.
from
Just got to bring that one up actually.
November. We had that massive gap up.
I mean, it's kind of at the 200 moving average at the moment, but like you say, the gap is probably a bit more of a magnet than the 200 moving average at the moment. Given the way the market is going, of course, we get rid of these lines as well. They're prehistoric lines. If I could do that, there we go. But yeah, the gap fill is another what? Ooh, that's actually quite a big drop. About 15% maybe,
I mean,
20%.
considering S&P 500 fell 17%. No, this is 56%. Ooh, wow. From the all-time
Yeah,
highs. Wow.
it's a fast mover. It's definitely a volatile stock for sure. I imagine the volume is still pretty high. Yeah, so it's actually increased. So it increased massively here back in November of last year, and it's increased again since March onwards. It's been pretty consistent with the volume, so it's definitely more people trading it at least. I'm not too sure. Maybe they're probably not investing in it, but definitely more people trading it for sure. We'll see what happens there. But any other thoughts on that, Plavin, while we're here?
I think I'll just see how it fills. I mean, most likely it's going to fill the gap. You may see a bounce here and there, but most likely it's going to fill that gap.
And then with a trade like that, there's a potential if it does fill the gap, and maybe you can get in at the gap, hypothetically, and then play it back to the 200 moving average, which is again, it's 23%. It's not too bad. You
Mm.
can allocate a very small portion of your portfolio, especially with a market like this. You need to be careful with your size, keep the risk management on top of your list, and go forward like that. But yeah, there's definitely a trade possibility there from the gap fill back to the 200 moving average. And by then, who knows? Maybe the 50 moving average will be down here somewhere. So
Yeah,
uh,
but I think that watching for that gap fill is important.
yeah,
Don't
for
rush on
sure.
the trade. Next is Snowflake.
Snowflake, one of your favorites.
Yeah, and guess what? It filled that gap.
It certainly did, and it went some further.
Another gap. It actually filled the gap and then created a mini gap within the gap itself with the 2 days of drop. But so there's a lot of trading happens at this level of 130, and that's a very big volume shelf there. We would, if that doesn't hold, I would watch the 114 115 level, because that's the next point of control where majority of the biggest volume shelf sits. Yeah, I mean, there's I slowly add a little bit to my position, but because the trend is still against Snowflake and it's going to come report earnings, now we'll also see the growth aspect for how the future guidance is going to be. If all companies are going to start hoarding cash, they might not invest again in SaaS SaaS softwares, and that is one of the easiest way to cut cost for companies, right? You don't want to lay off employees. You
Yeah,
want to probably first
get
uh,
rid of IT.
get rid of all the unnecessary expenses, or not unnecessary, but expenses that you can live with, right? You don't really need to that will not impact anybody's livelihood. So most companies, they will try that first, and unfortunately, companies like Snowflake, CRM, Salesforce, Adobe, these guys, they get impacted because of that.
It's going to be a really interesting earnings season, isn't it? To see what
It
people
is.
say in their earnings calls.
I,
It's just
I
around the corner now, so
Yeah, and I wouldn't be surprised if none of the companies or majority companies, they do not give a future guidance because they don't know. They might just say, "Hey, we'll wait and watch, and we'll see how the administration, gives us more information."
if they don't give future guidance, that's not good, really,
That's not
for
good.
the
Yeah,
stocks. So
that's not good because then what you're doing is if you're not giving future guidance, you're leaving the guidance on the assumption of the analyst. So if you are more bearish analyst on the company, you that will probably get more advertised and the stock will get compressed.
So that would be interesting to look for with Tim Cook, wouldn't it?
Yeah,
With
yeah.
Apple.
So I think
Uh,
for Snowflake, I would say just keep watching the level. If it falls further, my interest level would start to you know I will increase more interest around the 114, 15 level. That's where I'll probably add a lot more on my position.
yeah, I think the lows of 108 here roughly would be kind of a point of interest for me for sure. It's not a company that's going to go away. It's a very large market cap. It still has a very large, TAM in the market. So it's not TAM position in the
Yeah,
market.
total
Something like that.
addressable market is also pretty big. Yeah, exactly.
Yeah.
Okay, next up is CrowdStrike, another favorite.
Here we go. So yes, this is the weekly chart. Again, it's still kind of trending upwards. Maybe not as a bigger drop as what's going on here. Can't select something. Maybe not as a bigger drop as other stocks. So it's kind of holding up. We've always got to need cybersecurity, aren't we?
Yeah, and if you think about it, right from the high, we are only down 30. I mean, saying it's only down 30%, uh,
Yeah.
but it's pretty much in line with all the Max sevens also, right? You have Amazon drop 30%. You had I think Google also down 30%, something similar on those lines. I think Meta has held very well overall.
Meta's done really well. Yeah. We've got obviously a low here. If we do break down below that, I'll be looking for this volume shelf for sure around that kind of 260 to 280 level. Is that somewhere you'd be looking at as well, Kay? Have you analysed crowd much at the moment?
No, I don't have a position in crowd, but I definitely watch crowd very closely, and
Mm.
I think 300 would be a very good psychological level for me to start looking into it. Even on the fib, we have 298, which is the 61, which is the golden pocket. So this 298 to 328, this is the golden pocket. So if we do see weakness here, the next support that we want to see hold is 298 300, which is the psychological number.
Yeah, there's no harm in looking at different ETFs linked to CrowdStrike as well. So you've got Bug, you've got Lock. I think there's a couple of others as well related to kind of cybersecurity. One of my positions is one of those, and I've been looking at it recently, thinking maybe for the longer term, perhaps might be start nibbling away. So yeah, kind of a bit of a link to one of our earlier conversation around kind of adding to SPY and the dividend ETFs and that kind of stuff for the longer term. So
Yeah.
have a look at those kind of sector ETFs as well. Yeah, we spoke about SMH a bit earlier, CrowdStrike, etc. So they're definitely out there. The names are definitely out there, but you do need to do your kind of due
No,
diligence into that.
the only other input that I have on CrowdStrike is if you look at the next earnings, which is coming up end of May. So we have what, April, like about a month and a half. Uh, the EPS down revisions are 31 down revisions with zero up revisions. So analysts are expecting the stock to actually to have poor guidance as well. So keep that also in mind. If you are investing in CrowdStrike, we
Yeah, I
may
won't
see.
be I won't be rushing to buy it now.
Yeah. Okay. Next up is SMCI.
Okay, so what did you want to bring up with this one?
So SMCI, I would say that. So this is how I'm thinking from SMCI standpoint. I think right now there is, of course, a lot of red all around the market, and I'm looking at how we can play for the future. We may still see some weakness in SMCI, and I would be looking at the 25, 24, 25 level. that is where the support really starts to come in. And also because the 200-day moving average is at 2642. So that will be a very good support level. We are not that far away. We are 29, and then 26 is the 200-day support level. Now, if we are able to see a bounce from there, and we are able to maybe create a bar coding at that level of 20, near the 200-day moving average, 26 to maybe $32 or something like that, I'm looking for a synthetic long position on SMCI. And what synthetic long basically means is that you are buying a call option, and you're also selling a put. So to basically finance your call, generally, because when you're buying a call option, you will have to pay money, right? The premium to buy that call. So you can control 100 shares. So if you're buying one contract, you're also selling at that level. So if you, let's say, give an example, let's say for $30 call you're buying for January 2027, it costs you, let's say, $500, because for 100 shares.
Yeah.
And then you sell a put for the same strike price and the same expiration, you will get credit. And that's how you finance your synthetic long. So I think there is a lot of potential for SMCI in terms of from a financial from a fundamental standpoint, because they are one of the big ones to build data centers. Now the only concern is, the concern is that if the hyperscalers are going to pull back on the data center expense, which means that the AI play might hit a snag in the short to midterm. That's why synthetic long is mostly for leap, which is not even 365. I'm looking like 2 years out, so that you can control a lot of shares without having a big outlay. Because if you're going to go outright buy 100 shares, you're going to spend what, $3,000. Whereas if I use the same $3,000 to control call options for synthetic long, I can control a lot more call options, a lot more contracts for a upswing. But that again, I'm not fully convinced whether I will take that trade or not. I'll still watch. I would like the stock to go down even further, and on the 200-day. So if it hits 200-day and it bounces, then I might enter the synthetic long.
Interesting. It might be worth doing a video on that for viewers on the YouTube channel around synthetic longs.
Yeah.
It's not one I've heard before. I'm not an options trader, so it probably wouldn't be so much for me. But for people out there who are interested in options trading, it might be a good video for you to have on your channel, which is the handle on YouTube at InvestKaye. You can kind of see on the bottom of the screen there. So go check out him there, and I'll put pressure on him now to make the video for you.
I'll definitely do that for both SMCI and Apple. Yep.
Yeah, awesome. All right. I think you covered mostly on SMN. I've got nothing really to add. I mean, I like this box down here, as you kind of mentioned as well. Maybe a touch higher, around 26, just because this kind of trend line is coming through as well. Had a bit of a bounce on that on Friday, which is interesting given the rest of the market and how it reacted towards the end of the day. It had a bit of a bounce, which is a bit, in the opposite direction. So it's kind of respecting it. But of course, the lines at the moment are a little bit kind of pointless with all the kind of dramatization and volatility within the markets. Which is why I haven't been posting as many charts on my X profile, just because there's just no point. It's too erratic.
And I'll add just one more thing, because JP Morgan did upgrade the stock, because the problem with SMCI was the whole debacle with their accounting, and then they were about to be delisted, right? So because that fundamental problem has been solved, or at least there is no longer a bigger problem, we did see an upgrade from JP Morgan. So keep that in mind. Keep the long-term perspective in mind on these kind of trades. These are really swing trades or position trades. They're not day trades here.
What was the upgrade? Have you got it there on the screen, or not so much? No?
Yeah. Okay, next one is another TSMC. Now, this one is going to be tricky, honestly. Taiwan Semi. Is it TSMC or TSM?
TSM, yeah. TSMC is the same thing, but like some sort of maybe Honduras version.
Oh, okay.
Yeah, we'll do TSM. Maybe that's what Renee meant. So we'll do that one, because it makes sense. TSMC is the Honduras version, but we have TSM on the screen now on the daily chart. No moving averages, but yeah, another big drop for another semiconductor name. And you were talking about the tariffs earlier related to Taiwan, and probably not great news for them either, is it?
Yeah, I mean, if they are going to impose tariff on semiconductors on Taiwan, then pretty much every semiconductor stock is going to be under pressure, because Nvidia's margin is going to get compressed, AMD's margin is going to get compressed, Intel is already in the gutters. Which are the big ones? AVGO, Broadcom, Apple, Amazon, Google, they will get compressed too.
Exactly. I mean, from a chart perspective, it's quite appealing. But obviously, with everything that's going on, you can't. It's too risky. But you've got lots of resistance here back in 2021, 2022. Same again ish around kind of early parts of 24. Big bounce off of that in July of last year. We're coming back down to that level now. So it's an interesting spot for the chart. And you've also got this trend line, I imagine. If I could draw it properly, that'd be great. There we go. Right. We've got the trend line coming in there as well. So it's a very interesting point for buyers. But obviously, with everything that's going on, it's a risky play. It's definitely one I'll be looking at for sure. But maybe with just a smaller portion of my portfolio.
Now, if you think about the stock Nike, right, and Lululemon, they saw those massive drop on Thursday, or which day was announced? Wednesday announced or Thursday announced the tariff?
Wednesday.
Wednesdays, and they saw a sharp drop. The next day or the day after, Vietnam came out and said, hey, we are going to reduce our tariff to 0% to match, to help US, right? And Nike stock went back up because most of the production is happening over there.
Yeah.
And I think, in my assumption, it's my take, my opinion, I think a lot of smaller countries are probably going to follow the same route. They are probably going to try to get this solved. And like for example, Bangladesh, right? Most of your clothing is made in Bangladesh, Vietnam, Cambodia. Especially when the diversification of supply chain started happening, a lot of companies, they went to these places. And the whole debate, hey, bring back the manufacturing, but that takes years, right? That's not going to be 1 quarter, 2 quarters. It's going to be a year and a half to 2 years, 3 years, right? Depending upon and the problem is that if Trump is saying we will negotiate, then as a businessman, why would I want to invest when I can negotiate tariff?
Exactly. So lots of negotiations are going to be taking place, aren't there? So.
Yeah, I think smaller countries don't have the muscle to fight with USA, but I think European Union is not going to back down. China is not going to back down because it also makes them look weak. So think about from their standpoint, they don't want to look weak in front of their own citizens, just like US doesn't want to look weak. So it's going to be very interesting couple of weeks from now.
No wonder you started this live stream with a smile.
Well, I mean, it's like I put this post on Twitter on mine. I mean, on Twitter, on X, you have all these FinTwit influencers. They are like panic. First, they were all excited about how things are going to be, going to the moon, and then now they're all panicking. But what did you think if you're going to put tariff on in this global supply chain? How did you just forget what happened in COVID? Did you just forget when we had the supply chain issues, when you couldn't get the bathroom, toilet papers, semiconductor issues? We totally forgot all that. Like that's like gone with the wind, right? You don't have any memory of that.
It's in the past.
Yeah, but the problem is you have to learn from the past, right? And just being always bullish on everything. Hey man, everything is gonna be great. We're gonna and the worst. And I can't blame these guys. They just started investing like 5 years ago, 3 years ago, 2 years ago. They have become bigger accounts. That doesn't mean that they really understand what's happening. But the worst of the worst is the professional people like Jim Cramer. He's one of the worst person, but hey, he's calling for Bloody Monday, so you might even have a Green Monday. Who knows?
Yeah, it's going to be up 10%, I reckon.
You never know, man. You might just make up that 10% on S&P.
We did actually have Tesla as well, which I'll get the chart back up. We missed Tesla.
Oh my God, the star of the show, right? Elon Musk.
No, this is right. K-Dog, just now. There we go. Look, Tesla. We'll get up for you now, K-Dog. We almost missed that one. And then we've got another comment here from ManRam, a very loyal viewer. Of course, we'll have a look at that as well. Can you please share some good disruptive names with Moat to look at in these volatile times? might require a little bit more kind of research, but perhaps we can maybe just think of it on the spot, which is general industries. We've talked to a couple of this stream already, but we'll take a look at the Tesla chart first. Tesla chart? Was just what I said? Tesla chart. Fantastic. Yes. It hasn't really moved, to be fair, compared to the market. I mean, I know it's got down 15% this week, but it kind of already made its move before all of this, because the last few weeks it's actually been pretty flat. As flat as Tesla can get. But I mean, I don't really have many words to kind of say, but if you can keep another higher low from this low back here on the 10th of March, a little bit higher on the 18th of March, and kind of coming down here now at the beginning of April, if we can keep maintaining a higher low, then that would be obviously the best case scenario. But of course, we do have this trend line that's kind of being set because of that, and we can easily just break down below it. What do you think?
So I agree with on the short term. And I really think from a Tesla standpoint, right? I mean, there are just too many negative news on Tesla, but that doesn't matter at this point in time. Even if it goes down to 180, 150, I don't really care. I think the real bounce for Tesla will come as the excitement builds for the robotaxi release. And I think that's what you should look at. If you're going to trade Tesla, that is what how you should swing trade this. You get in at a position to the best of your feel on wherever you think Tesla should go, and it doesn't matter whether Tesla is selling less cars across the world or not. That doesn't matter, because for the stock to run up, you just need the enthusiasm and the euphoria.
So you're talking about buy the rumor, sell the news, almost.
Exactly. Exactly. So if you're going to trade on Tesla, I think that is the news that is where the real the buildup is going to happen. And generally, if you go back and look at Tesla chart for most of the years, you will see Tesla generally bottoms out around the April-May timeframe and starts to build up in the second half. And you have the biggest news for Tesla as a company, the full self-driving release or the robotaxi release. And if Tesla can show a couple other important news events, like for example, hey, we will be launching a sub $30,000 car in late 2025, early 2026. I think that's going to that's going to give a lot of confidence. And ultimately, Elon Musk needs to get out of the government, because that is not helping.
It's not helping him, but he's not going to get out of it, is he? Let's be honest.
We don't know, right? We
feel like he's enjoying it.
If Tesla falls enough, you will hear calls from Vanguard and BlackRock. Yeah. Even if the Tesla board doesn't call, those other shareholders will call, because guess what? Tesla is part of the Max 7, S&P 500, all those big index funds. But anyways, I think the real trade for Tesla is the FSD release. And it doesn't matter how successful it is or not, because you will not be holding to that. You're going to play that, you're going to make your money, and you're going to get out and just enjoy the show.
Yes, I think we covered Tesla quite nicely there. Obviously, the robotaxi event. When did you say that was? When is it moving to be?
It's in June. I don't know if they have released the date. At least I don't follow that closely, but I know it's in June sometime.
Okay, just hope it doesn't get delayed like the last time it did.
Well, here's the thing. There's another trade to that. If it gets delayed, guess what? The stock is going down, sub $200.
We might see that in the next couple of days anyway, to be fair.
Yeah.
Okay, so let's turn to the next part of the live stream. Obviously, we've got a question here from ManRam. I don't know if you can come up with any names off the top of your head there, Kaye, but he's looking for some disruptive names with a moat. It's a tricky one, isn't it, that one? Disruptive as well. It's tricky to come up with disruptive names with such a complex society. There's lots of changes been happening already, but you've got people like Airbnb that have kind of done their thing, but are they kind of growing at the moment? I don't think they are growing.
I mean, Airbnb, I think, lost its like WeWork was one that was supposed to disrupt it, and then with their bad practices and COVID did not help. The company could not go public. It was pretty bad. Airbnb, I think because they delayed their IPO, I think they lost that impact, and the COVID did not help. COVID helped, but it ruined the Airbnb model, and I think the hotels really cashed up. But if I really think, I mean, AI is the disruptive factor. Now, whether you are looking at AI from semiconductor standpoint or software standpoint, or maybe manufacturing softwares, like companies that use softwares for manufacturing purposes, I don't have any specific names because I generally tend to trade the Max 7s and semiconductors, particularly for AI. SaaS is another one. My main focus is mostly on SaaS companies. So stock ticker like a Path, maybe Monday.com is another one that you could look into from a SaaS standpoint. Um, I like it, but I haven't like invested in it yet.
I'm going to say one that's quite controversial, and I feel like you might know which one I'm going to say. Do you want to guess?
Neo?
Yeah, Neo. Obviously, it's a tricky one. They're Chinese, but they do have battery swapping, which no one else really has. Whether it's yet to be taken off or not, we're not too sure. But they also have the infrastructure throughout the whole of China that they've been building for the last 4 or 5 years to help other electric vehicles to help them charge and all that kind of stuff as well. And returning that power back to the grid, the Chinese grid. So that alone is a type of moat for an electric vehicle
Yeah.
company.
How about BYD though, with their new release that you could get the faster charging in 5 minutes?
I didn't see that, so I need to look into that. When was that?
It was released like a week and a half ago.
Okay. So
Yeah,
much has happened. I missed that one. Yeah.
yeah. We got a couple comments. So we have Justin. He wants to see Microsoft, so we can cover Microsoft. But then there's another comment from Don Oasis. Why aren't you guys talking about Tesla ETFs? When Tesla stock goes down, the ETF goes up. So you mean
Inverse. That must be
leverage one?
inverse.
Yeah,
Inverse
inverse.
ETFs. Yeah.
I'm not a big fan of leverage ETFs, but I don't know. You can speak to that. I don't trade leverage ones here.
I have done, but just, for me personally, I just trade the actual stock because the stock itself on the platform I use already has leverage. So it's not really much difference for me, but you can use leverage ETFs if you prefer to go down that route. I think there's loads of different types of Tesla ones. Loads of them, obviously, with the kind of volatility it produces, it actually makes a lot of sense. But personally, I just use the actual stock itself and just short it, buy it if I am going to do it like that. But yeah, no, they're definitely out there available for people. We've got Justin here. Maybe we'll finish off with Justin. Of course,
Yeah.
another loyal viewer. We really appreciate you coming back every week, Justin. A little bit later than normal, of course, with your comment. Normally you're in there quite early. So we do appreciate it. We'll take a look at Microsoft now for you. Let's jump into that. Let's have a look. Right, so this is Tesla, MSFT. Another one that's been kind of pummeled down. I did have this kind of range of 368 to 382 drawn. Again, it's just kind of punched straight to. Oh, hang on, your head's in the way. It's kind of punched straight through that in a negative fashion. Of course, we do have this previous trend line, which it is kind of here at now. So there is a potential for it to kind of have a little bit of a bounce here. But of course, with the market the way it is, we've been saying the whole stream, the market the way it is, it's hard to kind of really get into any positions at the moment just because it's so uncertain. Obviously, it's so volatile, it's so emotional is probably the right word. The market at the moment, it's a very emotional market, so it's just a tricky one to navigate. But if you like, I'm going to keep talking. If you like Microsoft for the long term, it's been flat for some time. It hasn't moved up for the likes of Meta and Amazon in previous kind of year or so. It's just traded flat for the last almost 2 years. No, that's last year. Well, yeah, I guess a year and a half. So there is potential for Microsoft for the future. But I know you're going to say some words around the kind of Copilot and their kind of innovation and whether they're actually doing enough for their future. So do you want to take the seat there?
Absolutely. So Microsoft is going to report earnings on 4/24. You do have 19 up revisions, 11 down revisions on the EPS. The primary problem with Microsoft is, again, they have not been able to monetize their AI Copilot, right? They are also, or at least rumors, or at least whatever I read on CNBC and other places, is that they are pulling back on the data center build out and hype, on that. So it's going to be very interesting to hear the future guidance and their thoughts on how they are looking to monetize their current investment. Because if you're just bringing, a few billion here, a few billion there from all the investment that you have done on AI, it's a big problem. And the real investment really comes from the software. And the problem is, so I use Microsoft, and most people who work corporate probably use Microsoft Teams and all that product, at your workplace. Most companies that at least I know don't even use the Copilot version anymore, because it's an additional pay that they have to pay for per user per month. So that adds cost to the company. And again, going back to the same problem, if it's going to cost a company a lot of money, and in this situation, I think Microsoft probably will not be able to convince a lot more customers to start buying, because hey, you're just writing a better email using Copilot. No, unless now,
And you can do that with anything, really.
yeah.
It doesn't have to
Now,
be Copilot.
Now, JP Morgan and a couple bigger banks, they have, they are starting to build using AI to, help them do research for their mortgage business and for their investing business. So those kind of use cases are completely different, right? But most the general public that are using Microsoft Teams, and they're not even, I'll give you a simple example. You record a meeting in Teams. So you're having a meeting in Teams, and the AI can, once you record, it can auto transcribe that meeting minutes. That's a cost, that's a feature that has to be paid for it. So the company will say, well, you know why, just go the old school and write meeting minutes using watching the video. Why do you need the AI to do that? How can you sell a feature like that to a company they don't want to spend money on? Like same thing with Zoom, right? Zoom, you have to pay for that feature. And those features should be free, honestly, at this point in time. They shouldn't be charging for that.
So to go back to the chart then, we've got this very interesting level. We've got two very prominent previous resistance points around this kind of 344 level, for 345, that kind of area. Back here in kind of, very late 2021, and then early or mid parts of 2023 as well. Coming down to there, we're breaking that zone that I previously drew. Of course, obviously, my zone didn't quite hold, and that's fair enough. Not all my zones hold. In fact, none of them have held in the last 2 weeks. But perhaps this 345 level might be an area for people to look at. Lots of volume here as well. From a chart perspective, obviously, it's tricky charting, as we mentioned a few times in this environment, but it's still worth looking at the charts. Of course, they do tell a story. They are still, human emotions on a piece of paper, or in this case, in a browser. But I like Microsoft for the long term, especially if it comes down to 345, because they're still a big stock. They're still a very prominent company within society, of course.
Yeah, no, it's a max 7, right? I mean, I think from your portfolio standpoint, if you have a bigger position, you should look into adding more. It's below all the bigger moving averages. Is it the right time to add? I don't know. From a chart standpoint, I think they could go further down. Wait for the earnings, look at the future guidance, and then decide.
Exactly. So that concludes our session today. Obviously, 6th of April. We'll be ready for what happens tonight in the UK, and obviously midday for America. It could be an interesting futures open.
It might be just a blub. Nothing happens. Just like a flat day.
I don't think it's going to happen like that. But I think we're either going to have an aggressive upside or aggressive downside once again, followed by the opposite. I think it'll be a very emotional day tomorrow for sure. I think people have been thinking over the weekend what they're going to do with their portfolios, what they're going to buy for the long term. If certain stocks get to certain levels, I think they'll probably rush in and grab them. It's all human emotion, Kaye. You know that.
Yeah,
and
yeah.
I think half of the viewers do too. And with that, obviously, we want to kind of put it onto that kind of emotional side. Just be careful when you're out there. Don't rush into buying things. Don't FOMO things. Just if you're really feeling even a little bit nervous, just sit on your hands. Be patient. Even just turn it off for a couple of days and see what happens. It's very market news driven. The market is very news driven, should I say? So just kind of if you feel a little bit apprehensive, then just sit on your hands. I'm going to stop waffling now. I'm just going to finally thank Wolf again for letting us use the platform. We really appreciate it. Almost up to 5,000 viewers again today, which is absolutely magnificent, especially within these red markets. And yeah, Kaye, I'll let you close out the stream.
Awesome. I agree with your sentiments, and my take on this one is this is actually take this as an opportunity for your long-term portfolio. Don't swing for fences and don't swing for meme names. Stick to good quality company and add on moving averages. Like, when it's below those massive moving averages, do dollar cost average, but do weighted dollar cost average. And I'll just close it at that. Leave it at that.
Awesome. We'll see what this week brings, and we'll be back this time next week as well to give our thoughts on what's going to happen, what's going to unfold. So thank you everyone for watching. We really appreciate it, and we'll see you next week. Take care, everyone.
Take care. Thank you for watching.